Hello and welcome. If you're involved in the UK's crypto scene, you have absolutely come to the right place. Today we're going to break down the, let's be honest, pretty complex world of tax on DeFi staking rewards for the 2025-26 tax year. This entire guide was put together by the experts over at My Tax Accountant, so let's dive right into their analysis.
Okay, let's not waste any time. Are you earning rewards from DeFi staking? You need to listen to this. You could be on the hook for a tax bill to HMRC for money that's still sitting in your wallet as crypto, money you haven't even cashed out. It's called a dry tax charge, and believe me, it catches a lot of people by surprise every single year.
So what do we got on the agenda? First, we'll tackle the main tax headache. Then we'll uncover something called the dual taxation trap. You definitely need to know about that. After that, we'll expose a hidden landmine that could affect your original investment. We'll also look at a potential fix from HMRC, figure out the huge difference between being an investor versus a trader, and then wrap it all up with some practical next steps for you.
Right, let's get into our first section, the fundamental tax headache with DeFi. Before we even get to the numbers and the nitty-gritty rules, you've got to understand the core problem from HMRC's perspective.
Okay, so just to make sure we're all on the same page, let's quickly nail down these terms. Decentralized finance, or DeFi, is really just a broad term for financial stuff like lending and saving that runs on a public blockchain. And staking, that's just the act of locking up your crypto to help run the network, and for doing that, you earn rewards. Simple as that.
Now this slide right here, this contains probably the single most important sentence for understanding UK crypto tax. HMRC does not see your crypto as money. They see it as property. Think of it like a share, a piece of art, or even a house. Literally every tax rule that we're about to discuss flows from this one crucial decision.
And that brings us to the biggest headache of all for people earning staking rewards, the dual taxation trap. Now that's not just a scary name I've made up, it's genuinely how a single reward can get taxed not once, but twice.
So how does this trap actually work? Well, your reward gets hit by two completely separate tax events. The first one happens the moment you receive the reward. At that exact point, HMRC treats it as income and you owe income tax. The second event happens down the line if and when you sell or trade that reward. Any profit you've made since you got it is then hit with capital gains tax. Two steps, two different taxes on the same reward.
Let's break down that first step, income tax. Your staking rewards are considered miscellaneous income. In plain English, that means their value is added on top of your other earnings for the year, and you pay tax at your highest rate. So, for the 2025/26 tax year, that could be 20%, 40%, or even the 45% additional rate, all depending on your total income.
And now for step 2, capital gains tax. So later on, if you get rid of those reward tokens, and that means selling them for pounds, swapping them for another crypto, or even just spending them, any increase in their value is a capital gain. For this tax year, that gain gets taxed at 18% if you're a basic rate taxpayer, and that jumps up to 24% if you're in the higher or additional rate bands.
Let's make this really clear with an example. Let's say we have Aisha, a freelance designer based in London. She gets a staking reward that's worth £100 on the day it hits her wallet. She's a basic rate taxpayer, so right away, she owes £20 in income tax on that. Now she decides to hold on to the reward, and a few months later, it's gone up in value to £150. She sells it. The capital gain is that £50 difference. Her capital gains tax on that is 18%, which works out to another £9. So in total, that £100 reward has created a £29 tax bill.
And here's a massive pro tip, because this is where so many people go wrong. The income value is the fair market value in pounds on the day you get control of the reward. It's got nothing to do with when you decide to cash it out. This means you have to keep really good records of the price on the day you receive every single reward.
Okay, so that dual tax trap on your rewards is tricky enough, right? But that's not the end of the story. And stay with me here, because this next point is a big one that might actually surprise you. There's another hidden tax landmine, and this one doesn't affect your rewards. It affects your original investment.
Just think about it for a second. To earn those rewards in the first place, you had to stake your original coins, your principal. We've talked about the tax on the rewards, but what about the tax situation for the crypto you actually put into the staking pool?
This is the big shocker for most people. You'd naturally think that no tax is due on your original coins until you actually sell them for good, right? Wrong. Under the current, very strict reading of UK law, the simple act of staking them could be seen as a disposal, which could trigger an immediate capital gains tax bill on any profit you're sitting on.
So why on earth is this the case?
Well, it all comes down to a really tricky legal idea called beneficial ownership transfer. When you send your crypto to a DeFi staking contract, from a legal standpoint, you might be transferring control of it away. And even though you fully expect to get it back, the law can see that transfer of ownership as a disposal. And in the tax world, a disposal triggers a capital gains event. It's a huge, huge problem.
Now, I know that all sounds pretty bleak, but there is some good news. HMRC knows this is a problem. They're very aware of how difficult this makes things, and they are actively looking at a potential solution to fix it for stakers like you.
And this isn't just talk either. This whole process kicked off back in July 2022 when they asked for evidence. That led to some concrete proposals in April 2023, and now the government is actually working on potential new laws based on all that feedback. So you can see there's a clear path towards a much more sensible system. The proposed fix is something called the no gain, no loss principle. If this becomes law, it would mean that when you stake your crypto, the disposal would be treated as having zero gain. Basically, it would pause the capital gains tax until you actually properly sell your assets. But, and this is the most important word on this slide, but it is not the law yet. You cannot apply this to your current tax returns.
Okay, let's move on. There is one last, absolutely massive piece of the puzzle that we need to talk about. It changes everything about how your crypto is taxed, and that is, does HMRC see you as a casual investor or as a professional trader? The difference is like night and day.
HMRC uses a set of tests called the badges of trade to figure this out. They'll look at things like, are you doing this to make a profit? How many transactions are you doing? How organized are you? How quickly are you buying and selling? It's important to know, though, HMRC has said that it's only in exceptional circumstances that someone would be classed as a trader. For almost everyone, you're going to be an investor.
And this slide shows you exactly why that matters so much. As an investor, your profits get hit with capital gains tax, so that's 18% or 24%. But if you're classed as a trader, all your profits are taxed as income. That's rates of up to 45%. And you have to pay national insurance on top of that. The difference to your final tax bill is just enormous.
Right. We have covered a ton of complex stuff here. So what do you actually do with all this? What are your practical next steps for navigating this whole messy situation?
Let's just quickly recap the 4 absolute must-know points. 1. Staking rewards are in a dual tax trap. Income tax first, capital gains tax later. 2. Just staking your original coins might be a taxable event right now. 3. Help is on the way with no gain, no loss, but it's not the law yet, so you can't use it. And 4. Whether you're an investor or a trader changes everything.
Okay, and now for the really important bit. Please be aware that all the information we've discussed today is for general guidance only. It should not be used on its own to make financial decisions, because it is not financial advice. Tax law is incredibly complicated, and it's constantly changing.
So the bottom line is this. To really navigate the world of UK crypto tax with confidence, you have to talk to an expert. For professional help with staking or any other tax questions you have, we recommend you get in touch with the team who put this guide together, My Tax Accountant. You can call them on 0208-570-8531, or you can email them at info@mytaxaccountant.co.uk. Thanks for watching.